Hey guys, welcome back and thank you for tuning in. So this is going to be a very short topic, a very short lecture, but an important one. And we've already talked about ICT Friday setup, which you've witnessed. It works just very fine on all your pairs, all your Forex pairs. But in this case, we're talking about the ultimate Monday setup. And why I'm using the ultimate Monday setup because it is not directly from ICT teaching. It's something I studied by myself, but using some kind of you know basic part of ICT like the new week opening gaps and stuff to formulate this particular setup. Well, most of the professional traders I know, or rather most of the traders I know, don't trade on Monday. Have you ever asked why? And I know some of you too don't trade on Monday because it's the opening of the week. The bias then is very, very unpredictable. You don't know where price is likely to go. It's either going up or it's either going down. Sometimes it's very, very unpredictable. So most people just stay off Monday and let Tuesday, that's the second of the week, come with the clarity. Okay. I understand that, and I was doing that before because trust me when I say Monday can be very unpredictable. But not until a few months ago when I found a setup from just my normal back testing and studying, I found a setup that works 70% of the time. Yeah, when I say 70% of the time, I mean it only shows up just like 70%, and that's the 70% win rate. Okay, so any day you wake up and go to your chart on Monday and you don't see this particular setup, then it's a no trade day. That's just my plan. That's just how I do it. It's a no trade day. But if I see this particular setup, then it's guaranteed. Okay, nothing is guaranteed though, but this particular setup is locked in. Trust me. Just like the ICT Friday setup, which happened last week also or this week. You can just go to your charts. You see it. Once the distribution phase is bullish on Friday, price becomes bearish. That's the bias. Once the distribution phase is bearish on Friday, price becomes bullish. That's just the bias. Simple as anything. Now on Monday, how do we get Monday's intraday bias? What do we use? We are going to talk about that. Okay, so stay tuned and don't exit this video. All right, so first we are going to use the new week opening gap to get Monday bias. Like I mentioned earlier, work or new week opening gap, anyhow you want to call it, NWG. If you don't know anything about new week opening gap, um I have a video for that, so you can go back to the lecture or you just click the top right corner of your screen, you see the video there. So we use the new week opening gap to get Monday bias, and I'm not going to be explaining what new week opening gap means. So if you don't know, you can go back to that video. Now this is the two key things you want to note. Write this down. If Monday New York midnight opens, you know what is New York midnight opens? That's 12 o'clock a.m. where we calibrate our charts for the new day, right? So if Monday that New York midnight opens below the new week opening gap, price straight into it later in the day, taking any nearest liquidity to go opposite. I don't know if that's clear, but I'm going to do some charting also, right? And if Monday New York midnight opens above the new week opening gap, price trades into it later in the day, taking any nearest liquidity to go opposite. Now, this is what I mean. The new week opening gap is not exactly on Monday New York midnight open. It's on Sunday. So that Sunday, 5 o'clock in Forex pairs, 5 o'clock, 5 p.m. New York time zone, Sunday. Market opens then. But normally we don't trade till Monday, right? Now on NASDAQ, it is Sunday 6 p.m. Market opens then. So that closing of Friday to the opening of on Monday, to the opening of price on Monday, price usually leaves a gap. You can go and learn about the new week opening gap on that video. You understand what I'm talking about. Price usually leaves a gap. So that gap is our new week opening gap. Now you outline that, right? On Monday's open, that's the midnight open. If price opens below the new week opening gap, below that gap, price will trade into it later in the day, taking any nearest liquidity to go opposite. That's to sell back. Now, if Monday opens above then work, price trades into it later in the day, taking any nearest liquidity to go opposite. That's to buy back, right? So this thing happens 70% of the time. Like I say, if it doesn't happen, then you're not supposed to trade that Monday. And let's look at the chart. Okay, so this is NASDAQ, but I'm going to do example on other currency pairs so you know that it doesn't just work on NASDAQ. It works on all currency pairs and indices because they usually have the new week opening gap. It does not work on crypto because crypto runs 24/7, so it doesn't have any opening and anything. It just keeps going onward. Well, back to the chart, right? So this is a new week opening gap. It's going to be very easy if you mark out your opening gap from the 1 minute time frame or the 5 minute time frame. So mine was marked out from the 5 minute time frame. So you can see the on this is the 15 minute time frame. It's not really looking like a gap, but if you go to the 1 minute time frame or 5 minute time frame, you see it's a very large gap. That's the time frame you use to mark out your NWG, right? So we mark that out, the high and the low, that's the gap. Now, where did midnight open? You can see it here, this vertical red line. That's midnight open, opening below the work. Now, what do we talk about price opening below the work? See it here. If Monday, New York midnight opens below the New York opening gap, price trades into it later in the day, taking any nearest liquidity to go opposite. So you can see that this New York opening gap acts as a magnet. So whatever it is, once price opens that Monday, it's magneted to this particular gap. Price must go to it. So it just depends on which side price is, which side of the gap price is. If it's below, price trades back into it and sell later. If it's above, price trades back into it and buy later. Now, you can see how price trades into it during New York session. Taking out this particular, if you check it on the lower time frame, let's say 5 minutes, that's a very valid buy side liquidity, right? Price taking that out during 9:30, equities open, and selling off to this nearest low as the potential target. I usually do talk about you taking profit at the very obvious high or low because most times that's where price returns, that's where price rejects from, right? So let's look at another example. Now, this is a new week opening gap. You can see there, even if I don't label it, you can see this gap is very, very obvious on the 15-minute time frame. But it's also advisable to go to the 1 minute time frame or 5 minute time frame or even 3 minute time frame to mark these gaps, any one you choose, right? But this one is tricky because you can see price opens inside that new week opening gap. So in this case, what do you do? Because the main idea is to wait for price to open above or below the work so that we can get our intraday bias from there. Now, price is opening inside the new week opening gap. Well, it's very simple because you mark out your buy side liquidity, which is this high, and you mark out your sell side liquidity, which is this low. So whichever price comes for during New York is the fill that takes price to the opposite direction. As you can see, we have our sell side liquidity. Like I said, price takes out any nearest liquidity to go to the opposite. So this is the nearest liquidity after trading back into the new week opening gap, then starts going for the opposite, which is the nearest obvious high. You can take all profit there. You find I'm not here to talk about entry setups, but I'm sure you can find entry setups that will take you from there to this high on the lower time frame, right? So let's look at another example. This is going to be the last example for NASDAQ, I think so, right? Okay, so look at this. This new week opening gap is very, very obvious on the 50-minute time frame. So where did Monday open? Monday opens above the work. You can see, like, I don't do things with just one example, then come explain, no evidence, then that's the end of the video. No, I don't do things that I teach you things not because of content. I teach you what I trade, and very soon I'll be making a video where I put all these things together, where I put the Friday setup together and execute. I cannot project my phone to my system at the moment. I know if I should research on how to do it, I can do it, but I will be putting it all together using the demo trade and trading my live accounts together, because I can't be trading demo trade and my live account is sitting there. So I'll be executing with my phone while I'll be showing you on what I'm executing on my phone on the demo trading. So after the execution, I'll just take a screenshot of all the executions I did on my phone and show you on the screen like a screenshot. Okay, so I'm going to be doing that video once we are done with this course. I'll be putting everything together. Then the Fridays setup, this Monday setup, I'll be doing it live so you see it. You see how I do it like during live markets. You see that I do it, and all the executions will be demo and live accounts. But I cannot project my phone because I tried it before and my system was very, very slow. So instead, I'll be showing you the executions I'm executing on my live account on the demo trading account. Then after the trade is closed and everything, I'll just take a screenshot of all the execution I took from the MT5 platform and I'll show you on the screen, right? If that's okay. So you see that everything I teach actually works. Then I'll also do a put it all together video on Tuesday, Wednesday, Thursday. I make sure I do a put it all together video on every day of the week. So you see that whatever I teach is what I trade, and those in my community know that very well. So back to the video. Okay, so you can see midnight opens just above the new week opening gap. So in this case, what did the note say you should do? You should wait for price to trade back to the new week opening gap, because this is like a magnet in price anywhere, any time frame, any pair. Price trades back on that same Monday, taking out any nearest liquidity. Now you might think this low is the nearest liquidity, but no. If you look at the 5 minute time frame, it's very important. This low is also a sell side liquidity, because it's obvious it's the beginning of that move, right? It might not look like a sell side liquidity here on the higher time frame, but on the lower time frame it is, and you can see even how price is respecting that new week opening gap. So you can see two confluence at a time. It's telling you that price is ready to reject to the nearest high or anyone above there. My chart is not large enough to show you that, right? So during New York time frame, you wait for price to come back to the new week opening gap, taking any nearest high or any nearest low, any nearest liquidity in general. The nearest liquidity, I know some of you mark here, but trust me, I'm marking here, and I'm looking for reversal entry pattern. Just immediately price is reaching for that. Take it towards to the nearest high. Now, let me give you another bonus. In some cases, especially on NASDAQ, there are times where price trades into this new week opening gap before New York, right? Price trades into this new week opening gap before New York, but the rest of the thing is pretty much as the note says. What you do is you wait for equities open and find a continuation setup. Continuation setup might be the intraday AMD, like I thought, because you've already gotten your bias. Price have already traded into the new week opening gap, so price doesn't need to go there again. You already did that in London session. So New York session, you find the continuation setup like the inverse fair value gap or the intraday fair value gap setup, right? Let's look at another example. Let's look at Euro USD for that matter. Okay, so this is Euro USD, and you can see it's still doing the same thing that NASDAQ was doing. So it's general. It's not mainly for NASDAQ. This setup works on every pair. Don't take my word for it. Just go back and study these things, okay? Go back and study this thing. Pick your chart. This is the weekend. Study these things before you apply them on live market. So we have the new week opening gap there, which is obviously outlined, and we have the midnight open Monday. So you can see price opening below the work. Most times the inward or the new week opening gap act as a support and resistance. So just to make things very less complicated, you can write that on your note. The new week opening gap act as support and resistance. And you know that the support will always be tested for you that knows for those of you that trades that. I know that resistance will always be tested. And from all the examples I've been showing, you can see that price is always magneted to these areas. That means it's always tested and rejected. I think that sounds fair, right? So this is price trading into the work. That high, this is what I was explaining in the previous example. You can see that high, even though it has a gap, that high is also a buy side liquidity. Look at it very well. That high or this high and this high is relatively equal, which makes it a buy side liquidity. So price trades back into the new week opening gap, taking any nearest liquidity. You should know all these things. I think I'm going to make a lecture on how to identify true buy side liquidity and true sell side liquidity, because most of you sometimes mark a buy side liquidity that price doesn't reach for, or mark a buy side liquidity that price does not respect. So I'm going to make a video for that. Anticipate that, right? I don't know when, but anticipate that lecture. Okay, so price trades back into the work, taking out any nearest liquidity, then we sell off. You can see that. So you look for a lower time frame entry there and sell off. As simple as that. Very simple. This works on any pair. You can see this is Euro USD. I think I'm lying. Look at the watermark here, Euro USD 15 minutes time frame. Let's look at another example before we call it a day. I don't want the video to be too long. Well, this is another new week opening gap, and you can see this is not very visible on the 15-minute time frame, because like I said, you always mark with your 5-minute time frame and your 1-minute time frame. So you mark that out, that's your new week opening gap. Price opens just slightly below the new week opening gap, so that's telling you that okay, that is going to call back. Price is going to reach for that new week opening gap again. This high and this high is relatively equal, making it the buy side liquidity. Although I now align it, but I'm showing it to you now. This high and this high is relatively equal, making that the nearest buy side liquidity to the gap. Price takes that and sell off. Now, to some of you who trade London session, this could be a very big sell, catching the high of the day, because trust me, this is how you catch the high of Monday, the high of Monday and the low of Monday using this particular setup. There's no any other setup you use here. No break of structure, no support and resistance, no nothing. This particular setup is how you catch the high or the low of Monday. Then you just go the opposite. If you are specialized on trading New York, you can see this is an intraday value gap or intraday AMD setup. Price trades back to it. You look for a setup to sell back. Now, if you think I'm lying, let's go back to this. Okay, you can see price takes that out, forms the high of the day, high of Monday, and the rest is just massive amount of profit. Let's look at another. Price trades back into the work, forms the low of the day, and the rest is what? Massive amount of profit. So you want to predict the high of Monday and the low of Monday. Trust me, this particular setup is what you use. No sheets. Now let's look at another one. Okay, price trades back into the new week opening gap, taking out this necessary liquidity, forming the what? The low of the day. The rest of it is profit. Now let's look at another example. Okay, this I think was the first example. Price takes the work, trades back into this, forming the low of the day, and the rest of it is profit. You can wait for this setup, taking this, or you can wait for this, taking that, any of it. Once price takes out that obvious high as a target, it's most likely to reject, because it's a buy side liquidity. But this is the Monday setup, I promise. And trust me, I want to be seeing everybody in my community take this setup this next Monday. So on Monday, we'll be taking the setup together in the community. And if you're not in the community, in the Telegram community, check the description of this video and join the community, Sami Trading Up. It's more like a family there, because we help each other grow, and I love the love. Yeah, I love the love there. So thank you guys for tuning in. I'm very much grateful, and until next time, be safe and have a nice weekend.